Global markets waxed and waned with the good and bad news out overnight. Oil companies have been boosted by crude oil rising to over $62 a barrel. However, the news that the Japanese economy has slumped by the fastest pace since 1955 is likely to weigh on people's minds. In a piece of news that may be of interest to New Zealand farmers, dairy and company, effectively John Deere, shares rose in early trading. The world's largest maker of farm equipment reported second quarter profits that topped analyst estimates. They said sales of agricultural machines remained strong amid the economic recession, pointing towards what I see as confidence in agriculture on a global scale. Our currency is still trading over 60.5 cents to the US dollar on Thursday morning. Reports out of the US are raising concerns that the current corn crop is critically behind for this time of year. On average, only 62% of the estimated US corn crop has been planted, which is 23% behind where it usually is at this point. This late crop is likely to affect yields and overall production. The latest USDA report showed that 2009-2010 corn stocks are especially tight, and any significant production disruptions this summer could be very bullish for grain prices. This could also negatively impact livestock and dairy producer returns given the higher input feed costs. This is likely to mean additional production and price competitiveness of New Zealand's lower cost systems. On the dairy front, international markets seem to have stabilised over recent weeks. While last week's global dairy trade auction showed some slippage in forward prices, overall commodity prices have changed very little over the past 6 weeks. This stabilisation should provide a base over the coming 12 to 18 months for prices to slowly edge higher. A sharp rebound is unlikely given the continued economic weakness globally. Payouts over the coming 12 months could also be influenced by this slow rebound, so don't be surprised to see a lower payout in 2010 before a rebound in 2011. However, with production forecast to be lower and farmer margins tighter in other big producing nations, we are well positioned in the medium term.